On the same afternoon, retail investors were dumping XRP into a 4% pullback. A life insurance company managing over $800 billion of American family money quietly filed a new position in an XRP fund. Almost nobody outside professional trading desks noticed. The insurer is MassMutual. The fund is the Bitwise XRP exchange-traded fund. Insurance companies of that size cannot buy quietly. They file publicly. They knew everyone would see it. They did it anyway. That same weekend, on-chain data confirmed the largest XRP wallets on the planet added 20 million tokens to their positions over 7 days. On the heaviest days, whales absorbed more than 10 million XRP every 24 hours. That is the highest pace of whale accumulation in 10 months, measured by CryptoQuant, a platform that tracks large wallet activity on the blockchain. At the same moment, retail sentiment measured by Santiment sits at the third highest level of fear and doubt in 2 years. The smallest holders are scared. The biggest holders are loading up. They are reading the same headlines and reaching opposite conclusions. That is the single most important fact in this market right now. Here is the exact price action driving the split. On Friday, April 17th, XRP traded above $1.50 for the first time since February 4th. Intraday high was $1.51. It closed at $1.47. By Sunday, the price pulled back 4% to $1.42. Retail read it as another failure. Insiders read it differently. The pullback happened inside a week where American institutional money poured $119.6 million into XRP investment products. That is the strongest weekly flow since December reported by CoinShares. It is not the signature of distribution succeeding. It is the signature of accumulation absorbing supply. One day after MassMutual's filing surfaced, Ripple signed Kyobo Life Insurance, a South Korean Big Three life insurer managing $92 billion in assets, as the first institutional partner for live tokenized government bond settlement on the XRP ledger. Not a pilot, a live settlement, 2 institutional commitments. 2 continents, inside 48 hours. So let's break it all down. If I stop the video here, you would think this is the cleanest buy setup in crypto. I am not going to do that, because there is a force 9 days away that can erase every fundamental you just heard. Watch through the data section. The reason to stay starts right after. Exchange-traded funds are regulated products. They let retirement accounts buy XRP exposure the same way they buy shares of Apple. There are 6 active XRP exchange-traded funds in the United States. Combined, they hold about $1 billion in assets, with 787 million XRP in custody. March was rough. Those funds posted their first losing month ever. $31 million flowed out. Every bear case article pointed at it as proof that institutional demand was dying. Then April flipped. Since the 10th of this month, every single trading day has printed positive net inflows. April 15th added $17.1 million. That was the largest single-day print in 10 weeks. The 17th added $13.7 million. The weekly total through Friday was $55.4 million. For the month to date, XRP exchange-traded funds are at $65.9 million in net inflows. 2 full weeks of trading remain. The entire March outflow is already erased. February's $58 million, the previous best month of 2026, is about to be passed. Bitwise led Friday's print with $6.2 million. Franklin Templeton added $5.3 million. That is the same filing window where MassMutual's position was disclosed. Exchange reserves are falling across every major platform. CoinGlass data shows net tokens leaving exchanges all month. That is the on-chain fingerprint of long-term holders moving supply into private wallets. One more data point nobody in retail is watching. The short-term holder cohort, people who bought XRP within the last 7 days, peaked at 1.45% of all circulating supply on April 4th. That same group has collapsed to 0.68% today. Less than half remains. Those were the paper hands. They already sold. Their selling is behind us, not ahead, and here is the number that reframes everything. Whales absorbing 10 million XRP per day is roughly $14 million of buying pressure daily. Layer in the exchange-traded fund inflow pace of about 8 million per day over the past 2 weeks. That is $22 million of institutional absorption every trading day against a token the retail crowd is convinced is dead. Stop for a second. For years, XRP holders heard the same complaint from every critic of this asset. Ripple, the company, is thriving. The token is not. Two different stories, one disappointing the other. That critique was earned. It was true most of the time for most of the last 8 years. This week did not just bend that pattern, it reversed it. Ripple signed Kyobo, a company move. An American insurer bought the token directly, a token move. Whales printed their highest accumulation in 10 months, a token move. Flows printed the strongest week since December, a token move. For the first time in 2026, the company's wins and the token's demand moved together inside the same trading week. That is the emotional story. Now the structural one. Here is the other side of the ledger. Because if this setup were as clean as the accumulation data suggests, the price would be at $2 already. There is one force overriding every fundamental in this video, and it sits in Washington. On Wednesday, April 29th at 2 o'clock Eastern, the Federal Reserve announces its next rate decision. Think of the Federal Reserve as a gravitational force pulling on every risk asset on Earth. When that force tightens, crypto stops responding to its own news. When it loosens, even bad news gets bought. The main interest rate sits in a range of 3.5% to 3.75%. It has not moved since December. That is expensive money by any historical standard. It is the single biggest reason the price sits where it does today, and not at $3, despite everything you just heard. The FedWatch tool, a market that prices the odds of Fed decisions, currently puts the probability of another hold at 85%. Three forces keep the Fed paralyzed. Core personal consumption expenditures inflation, the price measure the Fed watches most, is stuck at 2.7%. Their target is 2%. Until that gap closes, cuts cannot be justified without restarting the inflation problem of 2022. Brent crude oil trades at $98 a barrel. The Strait of Hormuz, the waterway that normally carries 20% of the world's oil, has been closed for 7 weeks. A 10-day Lebanon-Israel ceasefire helped crude slip below 100. One headline out of Tehran puts it back above. And Jerome Powell's term as Federal Reserve Chair ends May 15th, 26 days. The Trump administration has opened a criminal investigation against him and is looking for a successor. Governor Stephen Moran already dissented in March, voting for a cut. Whoever holds the gavel after May is the single biggest unknown in American finance. Goldman Sachs raised its 12-month recession risk estimate to 30% earlier this month, directly citing the oil shock. The 10-year Treasury yield sits at 4.33%. That yield is the invisible ceiling every risk asset has to climb over before it rallies, and it has not moved meaningfully in 2 months. Now look at the contrast. The United States government classified XRP as a commodity on March 17th. Rakuten put XRP into 44 million Japanese wallets. Kyobo Life signed in Korea. MassMutual filed. Whale accumulation is at a 10-month high. Every fundamental reason to own XRP is stronger today than 6 months ago. All of this is real, and yet the token trades at $1.42. Fundamentals set the destination. Macro sets the timing. Here is the math nobody else in this space is running. The combined assets across all 6 American XRP exchange-traded funds are about $1 billion. That number took 6 months of steady institutional flow to build. Sitting directly above the current price between $1.51 and $1.57 is $3 billion of short liquidation clusters. That figure was identified by Adam Saville Brown, head of commercial at Tesseract Group. A short liquidation cluster is a price level where professional traders are betting XRP will fall. If price breaks through and holds, exchanges force those positions closed by buying XRP on the open market. That forced buying pushes price higher. Higher price triggers more liquidations. More liquidations trigger more buying. 3 billion is 3 times the entire combined assets of every XRP exchange-traded fund in the United States. Think of the plumbing. 6 months of patient institutional flow built $1 billion of regulated demand. One daily close above the compression zone can release 3 times that amount of forced buying inside 72 hours. Historical cascades of this kind have produced 30 to 50% price moves inside a single week. Now the walls above the price. Think of resistance as ceilings with crowds pressing down. $1.43 is the first ceiling, the 50-day moving average, where every rally since February has failed. The compression zone between 151 and 157 is where Friday's rally was rejected. $1.60 is the March 17th high. Above that, no material resistance until $2.25. The counterweight is concentration. About 6 out of every 10 XRP in existence are held by someone who is currently down on their investment. Every one of them becomes a potential seller on the way up. A single large holder taking profits can move price several percent in one session. That is exactly what happened during the Jed McCaleb transfers back in 2021. On the downside, support sits at $1.38, then $1.30, then $1.27. That last level has held 3 separate tests since February. If you are still with me this far, this is the reason to stay. Because the signals I am about to give you are what professional traders will be watching for, and they are simple enough that you can monitor them yourself without a Bloomberg terminal. 4 signals. Any one firing is meaningful. 2 firing together is confirmation. Signal 1. The Federal Reserve on April 29th. The rate decision is almost certainly another hold. The signal is Powell's press conference 30 minutes later. If he says the next meeting is live, Treasury yields drop and risk assets breathe. If he says more data is needed, XRP stays in range through June. Signal 2. The weekly exchange-traded fund flow number published every Monday by CoinShares. Another 50 million plus week confirms the insider thesis is intact. Below 20 million, something has shifted. Signal 3, a daily close above the compression zone with strong volume. That is the cascade trigger. Below it, XRP remains trapped. Above it, the path to 175 opens fast. Signal 4, the Clarity Act, the bipartisan bill that would give XRP permanent regulatory status under American law. A markup vote in the Senate Banking Committee is targeted for late April. Polymarket, a prediction market where people bet real money on political outcomes, currently prices passage at 55%. Above 70%, sidelined institutional money steps in. Bull case. 2 of those signals fire green. The liquidation cascade ignites. Jeffrey Kendrick at Standard Chartered recently cut his end-of-year target from $8 to $2.80. Even that reduced number is more than 100% above today's price. Bear case, Powell stays hawkish, fund flows stall, the Clarity Act vote slips to summer. XRP loses 130 support. Downside opens to 121, then potentially toward parity with a single dollar. I would rather lose views than mislead you. That path is real. You do not need to guess. You need to watch the 4 signals. The insider-outsider split is the cleanest this asset has shown in all of 2026. Insurance money, whales, and regulated products are buying. Retail is panicking. A single meeting in Washington decides which side was right. Tomorrow morning, the first XRP exchange-traded fund flow print of the final trading week before the Federal Reserve meets is published by CoinShares. One number. That number tells us whether the institutional accumulation survived Friday's rejection or whether insiders quietly trimmed over the weekend. Either direction moves the picture. I will have the figure, the breakdown, and the implications before the American market opens. This content is for informational and educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Fundamentals set the destination. Macro sets the timing. Stay sharp, stay informed.